Hello everyone, I hope everyone's having a good day. Today we're going to be going through something that I should have done yesterday, but we're going to be doing the outlook for this new week, and we're going to be reviewing the economic calendar, and yeah, that's basically it. So first thing I want to do is I want to jump into this week's news calendar. So there's lots of news this week. On Tuesday we have red folder, and Wednesday no red folder, but it's fine because it's Wednesday, middle of the week. That's sometimes the day where we have the most movement. And also Thursday we have 2 red folder unemployment claims, which I'm looking forward to. And Friday we have core PCE. And so everything looks good except Monday. Monday I'm going to be watching. I don't like that there's a bunch of red news after Monday. So I'm pretty sure that Monday is going to be a consolidation day, just accumulating orders for the rest of the week. So Monday I'll be watching. Other than that, every other day seems fine. So now let's move into the outlook. So let's begin with the week. So looking at the week like this, you can tell that if we go on the weekly chart, it's going to be looking like a slow week. So the open was here at this maybe opening gap, and we close at this up candles high. Body, sorry. So I want to actually read what I have written here. Okay, so looking at the week's candles, with the week starting off at the candle that created the NWOG, just by looking at these 5 candles, it gives you a feeling of doubt that we're going to reach for that premium gap. I'm not saying that we will, but it makes you second guess it if you're looking at that gap as a drawn liquidity. So second screenshot here, breaking it down on the 4 hour. I'll be interested to see what it does in the breaker, as it is a premium array and disrespecting the proof movement off of the discount array, such as a version wick. Let me go back to this screenshot here and notice how the week starts off with a big up close candle. Then for the next 2 days we kind of range within this new day opening gap, and then we have Thursday move higher and then tap into this rejection block here and redeliver to the premium of a discount of this wick, and then we have that big drop lower and we go back into the new week opening gap. So breaking down to lower time frame, you can see that once we have that rejection block tap, you can see that this also gives us a breaker, so this makes it a high probability to the soup. And you see how it delivers. That's just a add-on to how it's high probability. So see, we have the high low, and then we have a higher high into rejection block, and then we have a big drop lower giving us this breaker. So what's interesting here is that once we drop lower, we are still in respect to this inversion that we have here, and we are in respect to this wick consequent encroachment. So where we are right now is this is the 4 hour time frame. So we have the breaker here, which is the premium array, and we have these down here discount arrays. So if we start pushing through the breaker and we start to see disrespect of it, then that would basically mean that price has moved off of these discount arrays, and that we want to see a high price action now. So I just need more data, basically. That's what I'm saying. So yeah, and disrespecting is proof movement off of discount arrays, such as the inversion and the wick. The inversion's here and the wick is this area right here. So weekly open is the NWOG, Sunday 26th August 24 high. We'll be paying attention to how it reads the order block. That will tell me if order flow has switched to bullish after having that soup, which we don't from. So I'm actually gonna go back to let me go back to where we were here. Yeah, so we had this soup here, and then you can tell that after we had the soup, we switched order flow from bullish to bearish. So you see, we were respecting for value gaps, we were holding order blocks, and then once we took this high, we tapped into rejection block, and we just dumped from there. And then this is the first bearish array that we've had respected on our time frames in such a long time. So this gives me a shift in market order flow. So once we have that big drop lower after the soup, basically what I'm saying here is that after we tapped into the inversion into the wick, moving into this kind of order block will tell me whether those will be respected or not. If we start to push through this and we start to find the respect of the breaker, then I'll be looking to be more bearish. But if we respect this order block and we start to push through the breaker, then I'll be looking to be more bullish. Very two-sided on this week, so yeah. So looking at the weekly, you can tell this was such a slow week. And after we had that previous candle shooting higher, so this was expected. So you see this big candle here really pushing towards this premium breakaway gap. We had this kind of slow week here, which kind of consolidated a little bit, and then we had that big move lower, small move, a small move higher, and then this small move lower, and then we had this like kind of inactive body. So also something I'll note on the weekly is that we are also running into a breaker. So it's the only thing between us and the premium breakaway gap. Us is basically the current price. So if you ever hear me referring to us, I'm talking about price. Looks like we're running into a weekly breaker currently. How can we determine how far it's going to move into breaker? Lower time frame rejection block. So the breaker is within this kind of section here. It's within this lower move here. So you can kind of determine how far are we able to push into the breaker. I would say into this consequent encroachment level of the wick and the rejection block, which we have repriced to when we delivered lower from. So yeah, I want to say that the rejection off of the CE and the breaker, the rejection of the CE of the breaker is way too responsive for me to be looking for longs right now. So you can see that once we tap into that breaker, we respect it like very decently. We respect it almost perfectly off of the consequent encroachment, and then we have that big pullback and we remain lower. So yeah, and off of that breaker we create lower time frame breaker, which is the one that we are currently trading into, and we have change in state of delivery. So after tapping into this breaker on a higher time frame, we had that lower time frame, that breaker that we're speaking about, and there was also a change in state of delivery. I want to go back here and highlight it over here. Yeah, so we engulfed this up close candle pretty quickly, also this candle here, and this is our CISD. This will probably be used as an order block, and also think about how this push lower, this push higher here is this up close candle here. So this up close candle would be used as an order block, as well as this lower candle here that would be used as a breaker. And how we engulf this move here really quickly, that tells me that this was a high probability order block. So I want to see how we react off of this, and especially these two arrays here, because it seems that they delivered pretty well. And we would only get the answer whether when we respect or disrespect this order block and this breaker. So based off of purely price action, this is very two-sided. The reaction from the weekly breaker broken down to the rejection block, and having another breaker formed over time frame, and having a huge reaction off the soup, then stopping in an inversion and a wick overlapping with an NWOG is not what I have liked to see. If I was bearish, I need more price action to determine where they decide to go. So if I was bearish, hypothetically, I would have not liked to see this inversion held like this wick being held like this. I would have liked these inversions, these arrays to be pushed through violently, if I was bearish. But, what seems to be happening here is we're stopping at these arrays, and we start to move higher off them. And we had this big candle here, which was Powell's speech, taking out sell side, and also some buy side within this big candle lower. Or no, not taking buy side, sorry. Filling imbalance, so yeah. And so if I was also bullish, I would have not wanted to see this soup here. I would have not wanted to see the rejection block being respected, and I would want to see the breaker being pushed through and the discount order block being respected or held. So it's really two-sided this week, and here are some of the conditions that I had down. So if we were to move higher, we would respect the order block and push through the breaker and the rejection block. So basically what I'm saying, if I was bullish, I would want to see that. If we were bearish, we would start moving off of the breaker and inverse the order block and respect the change state delivery and reaper through the inversion we respect it and fill the wick. So if we want to be bearish, I'd like to see push through this, repair this inversion, and fill this entire wick and push through it. So, with the end of August tendency to move higher, which is, where is August in here? So you can see in the end of August, we have a big push lower, seasonality wise. And with the end of August tendency to move higher, I can only expect that we would fill a weekly gap and we're still return to push higher. I just don't want to be caught in longs when we were having retracement lower. So what I'm saying is that if we were to move lower this week, I expect it to only be a retracement. I don't expect it to be a reversal. So it could be reversing towards this gap here and towards this inversion as well there. So if we do see movement off of this breaker, which I still don't know if we're going to see movement off of the breaker, other than the rejection block holding and giving us that swoop. But other than that, I still need more price action to determine where I want to frame the weekly buys. So I'm not going to be looking at bonds just because I think that it's not the time to be looking at bonds. They're way too started fundamentally, and I'm just going to be looking at the dollar. So the sell side draws that we had highlighted on the previous week outlook, which you can find on my YouTube video, we met all of the sell side liquidity requirements and we pushed through them displacingly, giving us market shift between them. And there was many arrays on the left side of this chart. So this does not hold as a turtle soup. On the sell side, this would be a market shift. I think, here I have highlighted. And so you see here, those two sell side draws. We have that array here. Also have this array here, which was holding it for some time, sorry. And then we displaced through them, disrespecting them, and now we have nothing to hold price off of the soup. So my eye is on this sell side draw. The only thing in between it is this pool of, not pool of liquidity, this imbalance here that would be in the way of getting to the sell side draw. But I like the sell side draw because we have that small wick that failed to be, that failed to hit the sell side, and then we start trading higher. So any longers within this, and people that were long within this push lower, they almost got stopped out within this wick here, and then they got some profit, and this would be a sell side draw that we'd be looking towards. So yeah, that was basically it for this week's outlook. There is not much to go off of just because of this week's difficult price action. It was very challenging, and basically the summary of this outlook is that I want more data. I'm not ready to give a bias. I'm not ready to be one-sided. I'm not ready to mirror a bias before getting more price action. I'm going to be paying lots of attention to the order block that we had created and the breaker, because that will really tell me whether we want to respect the weekly breaker or not. So thank you all for watching, and I hope you guys all learned something from this video. And if you didn't, and if I'm missing something off of the weekly outlook, or if I'm not looking at things correctly, please let me know in the comments. And yeah, thank you all for watching.